So let's say you have, what is margin? Like I said, it is the amount required to execute an order. Let's say you made a deposit of $500 into your trading account, and you're operating with a leverage of 1:. Let's say you're operating with a leverage of 1:500. What this means is that with $1, you'll be able to purchase 500 units worth of currencies. Now, in the Forex market, the minimum quantity of currencies you can purchase is 1,000 units. Okay, 1,000 units. That is the minimum quantity you can purchase in the market. So if you're operating with 1:500, it means with $1, you'll be able to purchase 500. Okay, so if you have $2, you'll be able to purchase 1,000 units. So the minimum capital required to participate in the Forex market is $2.
Okay.
If you are trading with a leverage of 1:500, if it is leverage of 1:1,000 you're operating with, that means you can trade with $1.
Okay.
Do you get that?
Yes, sir.
So 1:500 means $1, you're able to purchase 500 units. So if you're operating, if you have $500 in your trading account, it is assumed you have 500 times 500. I think that's $250,000, right?
Yeah. Yes, sir.
So it is assumed you have $250,000. So with your $500, you can purchase the same quantity of currencies a trader who has $250,000 in his account will be able to purchase. So leverage helps increase your purchasing power. Okay, so it is assumed you have $250,000. So if you execute a trade, let's say you use 0.1 lot size, which is 1 pip, gives you $1. Now 0.1 simply means if you use 0.1 lot size, what you're demanding for is how many units?
If I'm using 0.1.
Yeah, how many units of currencies would that give you?
Okay. Is in the 500.
0.1 lot size. If you execute a trade with 0.1 lot size, what quantity of currencies are you demanding for?
Okay, 500 units.
Is 10,000.
Wait, okay.
0.1 is 10,000 units.
Okay.
Okay. 0.1 is
10,000.
10,000 units. So if $1 will be able to purchase 500 units, how many dollar will be required to purchase 10,000 units?
0.1.
$20. That is what will be required to purchase 10,000 units worth of currencies.
Okay.
Hope you're following. You need to understand this before we move to the next topic. These are the basic things you need to know. Okay? Before we go into strategies, these are the basic things you need to know. Do you get what I just shared with you? Do you understand?
No, sir.
Let me repeat.
Okay.
Let's say you have $500 in your trading account.
Okay.
And you're operating with a leverage of 1:500. With 1:500, $1 with $1. What this means is that with $1, you'll be able to purchase 500 units worth of currencies.
Yes, sir.
Now, if you have $500 in your account, it is assumed you have $250,000. How did I arrive at $250,000? $500 multiply 500.
Yes.
You'll get $250,000. So it is assumed you have $250,000 in your trading account.
Okay.
And with this $250,000, a standard account is 100,000, which is 100,000 units. Okay. And 100,000 units using lots is 1.0, right? This is the lot size for a standard account. This is a standard lot. So for you to be able to trade with 1.0 lot size, you're supposed to have $100,000 in your account. But with leverage, for example, if you're operating with a leverage of 1:500, all you need to deposit into your trading account is $200 to be able to trade like this guy that has $100,000 in his account, to be able to use 1.0 lot size. Are you following?
Yes.
So with your 500, this guy that has 250 will be able to trade with 2.5 lot size. This is the maximum lot size you can trade with. If you have $500 in your account and you're operating with a leverage of 1:500, this is the maximum lot size you can trade with, 2.5 lots.
Okay.
Okay. Now, I said, let's assume you execute a trade. Let's say you execute a trade with 0.1 lot size. 0.1 lot size is 10,000 units.
Okay.
Right? So with 1:500 leverage, if $1 gives you 500 units, how many units would give you, or how many dollar would give you 10,000? That would be 20. 20 times 500 will give you 10,000.
Yes.
You could also divide the 10,000 units by 500. That will give you 20.
20.
Right? So when you execute a trade with 0.1, $20 will be deducted as the margin from your balance.
Okay.
So this $20 will be the margin, and that will be deducted from your $500. So if $20 is deducted from the $500, what would you have left? $480.
$480.
This is your free margin.
Okay.
So free margin is amount you still have, or amount you can still use to execute new trades. That's your free margin. For example, if you execute another trade using 0.1, $20 will be deducted from the $480 free margin. Then it will drop to $460. So the more trade you execute, the more your free margin drops.
Okay.
Do you get that?
Yes, sir.
So that is margin. That's the difference between margin, balance, and free margin. Do you get that?
Yes, sir.
Okay, I want to be sure you understand this. So let's say we want to execute a trade with 0.5 on our $500 account. What will be the margin?
0.5.
Yes.
$500 account.
Yes. This 0.5 indicates how many quantity of currencies?
0.5.
How many quantity?
50,000 units.
Good, 50,000 units. Okay. So for us to be able to purchase 50,000 units, how much? What will be the margin? What will be the margin?
Margin here should be 50,000 divided by 500. Will be giving us 100.
100, right?
Yes, sir.
So the margin will be $100. You're correct. Okay.
Yes, sir.
So I believe you understand what leverage is. You understand what lots is. You understand margin. You understand free margin. Okay.
Okay, sir.
So before we look at the strategies I'll be teaching you tonight, there are some thoughts, important things you need to know. Okay, that would enhance your progress for your success in trading.
Okay.
To be successful in any endeavor, not just trading, you need to believe in yourself.
Okay, sir.
Self-belief is very important. Very important. There are a lot of people you would tell that you are into trading. They will tell you success in trading is difficult. Most that will tell you it's difficult, they've never tried trading. Okay.
Okay.
Probably they've heard from people who have had bad experience in trading. So they share other people's experience with you. Okay.
Okay.
So you have to believe that this is possible. Successful in this business. If you don't believe you can achieve success in trading, there's nothing I can do to help you. Do you get it? There's nothing I can do. I can teach you all the strategies I know. If you don't believe in yourself, you can't be successful. I'm successful today. I'm doing well in trading today because I believed right from day one that I would be successful. It is said that 95% of traders lose money. It's no fallacy, it's the reality. Okay? 95% of traders lose money. And one of the reasons they lose money is that most don't believe in themselves.
Okay.
So you have to believe you can do this. They're saying that if you believe you can, you can. If you believe you can't, you can't. Okay, so you have to believe in yourself that you can do this. If 5% are successful in trading, what you need to know is what those 5% know. Okay?
Okay, sir.
You need to know what those 5% know. And what's the 95% that are failing are doing. You need to know why they are failing so that you can avoid those things. Okay? And focus more on what the 5% that are successful are doing. Okay? So that was what I did when I started this journey. I wanted to know why people are losing in trading and why few people are successful in trading. What is it that these people are doing? Those are the things I want to do. Okay?
Okay, sir.
Another reason people fail in trading is that they approach the market with a wrong mindset. Okay? When I started trading, I started with the wrong mindset. And that's why I struggled for years to achieve success in trading. I came in with the mindset to blow overnight. Came with the mindset to hammer in a very short time. Wow. Okay? And one of the reasons I struggled. And today when I see people, come to me that they want to learn trading, I'm like, when they come to me, most of them, the questions they ask me just tells me the mindsets they are coming in with. Questions like, how can I grow $50? How long would it take me to grow $50 to thousands of dollars? Questions like that. When you come in with that kind of mindset to blow overnight, trust me, you will struggle for years. So I always tell my students, get rid of that mindset that you're going to hit the millions overnight. It will take a lot of time. Okay, so you have to give it time.
Okay.
Okay, we're all coming with the wrong mindset. Every one of us coming with the wrong mindset, wrong beliefs, and that's really hinders our progress in trading. So get rid of that mindset. Okay.
Okay, sir.
As you know, in every business, what you put in will determine your return.
Okay.
Investment. Okay. What you put in, you cannot start with $100 and you want to grow that $100 to 1,000 in 1 month. It is very possible. Okay. It is very possible. But as a beginner, you've not equipped yourself. You've not acquired, or you've not attained that level of going 100 to
1,000.
$1,000. Yeah, it's very possible. Very possible. Anything is possible in this market. I've seen people who have grown $6 to $100 in a day. Anything is possible. It also depends on the amount of risk you are willing to take. For some of these traders that flip 100 to 1,000 in 1 week or in 2 weeks, those guys are risk takers. Okay, they are risk takers. Once they fund their trading account with say $100, they've made up their mind that they want to lose that money. Do you get it? Okay. They've made up their mind, so they take very high risk. Sometimes it will work for them, but with such strategy is not sustainable. Okay, it's not sustainable. So what am I trying to say? Don't rush the process. Okay?
Okay, so
don't rush the process. You will see when the first time we met, the way you were rushing me, I was just laughing, you know. I intentionally delayed the classes just to know the kind of person that you are. Okay? That's the reason I've been posting the classes. At first, you wanted to rush the process. So I had to calm you down. Yeah, I had to calm you down.
All right, sir.
Okay, so get rid of that mindset. Okay?
Okay, sir.
Also, most newbie, you know, they have this belief that the system has to be complex to make them money. That's the mindset I started with. I was looking for a complicated system, a complex system, you know. It's not by being complex. Yeah. Most of the traders that make money apply very simple strategies. Okay. So if you are studying the charts or you are applying any indicator or any strategy, ensure that it's simple. Any strategy you want to develop or any strategy you're going to learn from anyone as a newbie, it has to be simple. Okay?
Okay, sir.
It has to be simple. The rules of your system or your strategy should be very easy to comprehend. Okay, the market itself is very complex. So you can't win in the market by using complex strategy. It has to be what? Simple. Okay. Also, the primary reason for trading is to attain financial independence, right? We want to attain financial freedom. That is why most of us are into trading, and it's very possible to attain financial independence trading in the financial market. But like I said, it's not going to happen overnight. Okay.
All right, sir.
It will take some time. It also depends on the time you dedicate to this craft. Okay.
Okay.
So if you want to attain independence, you have to learn to do things independently.
Okay.
Do you get that?
Yes,
learn to do things independently.
Okay.
Don't be the one that will be looking for signals. When I teach people with the mindset to make them independent traders.
Okay.
If you follow me for at most 60 days, you should be able to analyze the market. You should be able to execute trade by yourself. You should be able to know the right lot size to use on any trade. You should be able to know the best time to trade. Once you've known these things, you don't need my suggestions or guidance anymore. Okay?
Okay, sir.
You should learn to think independently. Okay? If you want to be successful. Not that I can't give signals, but if I give you signals, that won't make you a successful trader. You can be making money with the signals, but the days I decide I wouldn't be giving you signals. What happened? You stop making money, right?
Yeah, that's
You stop making money. So that is not, you can't attain financial independence. I've been in this game for over 10 years and I've not seen anyone who had become a millionaire following trading signals. I have not. Okay? I have not. In my 10 years of trading, I've never seen someone who had been consistently profitable using robots, trading softwares. It's possible to make some money trading with robots, but it's not sustainable long term. I've used some robots in the past, and in 6 months, I was able to make over 100% using those robots, but I still lost money using those robots. That's why I don't recommend robot trading. Maybe the robot I'll recommend is the one I will develop. It's still work in progress. Okay. But for now, there is no robot out there that I think would give you maximum result. Okay. So think independently. Okay.
Okay, sir.
So also, you don't have to trade every day to make money in this business. Okay. So it's a wrong mindset that you have to trade every day to make money. There are days that the market is volatile. There are days there's less volatility in the market. So you should more focus on the days that the market is more volatile. To be easy to make money in such a market. But when there's no volatility in the market, you keep recording losses. Okay?
Okay,
so
sir.
those are the important things I want you to know before we look into strategy. Believe in yourself. It is possible. I was told many were losing money in this business, but I didn't give up. I didn't give up. Okay? I didn't give up because, like I do say, financial independence or your financial prosperity is your sole responsibility. Okay? It's your sole responsibility. Nobody will get you out of your financial predicament. Okay? No one. Not even your family. It's your sole responsibility. It should be your sole priority. So you should always seek for information that would help, improve your financial literacy. Okay?
Okay, sir.
So that will be that on having the proper mindset. Very important. So let's go into how to define the trend of the market. There are three basic things you need to know to make money in this business. And the three things are the trend of the market, the risk, and the reward. That is all you need to know. Okay. So, and that's why we have the MetaTrader 4, okay, that we can use in analyzing the market. Okay. That's why we have this platform. I've taught you how to use candlestick patterns, right? For market analysis. How many of the candlestick patterns did we treat in the previous class?
About 3 of them.
Can you mention them?
Spinning top, spinning bottom, inverted hammer, angleman, shooting star.
And that's more than 3 now.
Yeah.
I think we also looked at engulfing pattern too.
No, sir.
We didn't treat engulfing.
Inside.
Okay, so that's one of the strategy you can apply in trading, candlestick patterns. As a beginner, I just want you to focus on candlestick patterns and resistance and support. And that's what I'll be teaching you in this class. Candlestick pattern, resistance and support. I think I taught you resistance and support, right?
No, sir.
Okay, so we'll be looking at resistance and support, and I'll be teaching you how you can combine the candlestick patterns you've learned with resistance and support. Okay.
Okay, sir.
So so want to know when we open the chart, we want to know the trend of the market, what price is doing now, and what it's likely going to do in the future. Okay, and that is the essence of this trading platform. Now, every analysis that is done using this platform is referred to as what? Technical analysis. Now, some things you need to know about technical analysis is that history, they say history always repeats itself. Okay?
Okay.
So in predicting what would happen in the future, you need to know the past. You need to know what price has done in the past. Okay?
Okay, sir.
I give an example using the Naira against the dollar. Since 1960 till date, the dollar has been gaining value against
Naira.
the Naira. So with that information or that knowledge, there is a high probability one can predict the future value of dollar against the Naira. Are you with me?
Yes, sir.
So since dollar has been gaining value against the Naira since 1960, there is a, let me say 70% certainty or probability that the dollar will gain value against Naira in years to come. I said 70% probability, not 100%.
70%.
70%, which is still a pass mark, right? That's excellent, right?
Yes.
So with that knowledge, if I want to invest now, I would invest in dollars. I will have some investment in dollars. I'm in Nigeria, so definitely I will have some investment in Naira, but at the same time, I would have some investment in dollars. Imagine if you had bought dollar in January. In January, the exchange rate was around 650. Wow. And at the moment, I think it's about 1,000, 1,002. How much? What is the rate now?
1,190.
And that's about 1,200. So if you had bought $1,000 in January, as at now, you would have made close to 100% return on your investment.
Yes, sir.
Without trading it in the market. Just buy it, keep it in your house, or just save it in your domiciliary account, your dollar account. Now just go and make the withdrawal and sell that dollar, and you would have made 100%. December would have been dirty, right? So I've been a dirty December. That's cool. That's cool profit. Not doing anything.
Yes, sir.
Not doing anything. You've made some good return, and that's because of the government policy. Okay, the government policy. What's happening in the economy? The Nigeria economy is not booming. It's not booming compared to the United States. That's why the Naira is losing value. And government policies, okay, would determine if the Naira will gain value against dollar.
Okay.
Okay. And with what is happening in Nigeria now, with government policy, the current government policy, there is a high probability that dollar will keep gaining value against the Naira.
Honestly.
Yes. 2014, watch out. 2024. If you have some good cash, buy dollars and keep. Okay? Open a domiciliary account. If you can't open a domiciliary account, keep some dollars.
Okay, sir.
Okay? People would say it's bad advice. Why are you asking people to invest? Even your president has investment in dollars.
Yes, sir.
They have investment. All the rich guys you see, the wealthy guys, they have investment in dollars.
Yes.
Okay? So you have to be smart. Have some investment in dollars. Even though it's $50, even though it's $100, have some investment in in dollars.
Dollar.
Very
Okay.
important. So we are using what has happened in the past. That's what technical analysis is all about, to predict what it will do in the future. For example, we are looking at USDJPY. Okay, we're looking at USDJPY. Now, I want to know the trend. That's the first thing I want to know. And there are two types of trend, or three types of trend. We have bullish, we have bearish, and we have sideways trend. Hope you remember.
Yes, sir.
Bullish,
Both bearish and sideways.
and sideways. When price is going up, we say the trend is bullish. When price is going down, we say the trend is bearish. And when price is neither bullish nor bearish, we say the trend is what? Consolidating, or the trend is ranging. Okay?
Okay, sir.
Or sideways, as we have it here. This was a sideways trend from this point, from this level to this level. You can see price was in a range from this point to this point.
Wow.
Okay, so we could also say that price is in equilibrium. Okay, in this case, we could also say demand equals supply. Do you get that? Demand equals supply. This could be called your supply level, and this could be called your demand level. Okay? Okay, we call this level, you could call it your supply or resistance level. This level, you could call it your demand or support. Support, yeah. Okay? So this is a ranging market. From this point to this point, what trend is that? The trend is bearish, right? The trend is bearish. Okay. Are you still here, right?
Yes, sir. Yes, sir.
From this point, price started dropping from this point to this point. When it got to this point, it took a break, right? There was a pause at this point, right?
Yes, sir.
There was a pause. Trend was bearish here. It got to this point, price ranged a little, then broke out from that range. And what happened? Price started going down. Okay, so the trend is bearish, but while the trend is bearish, we still had some ranging moments, right?
Okay, sir.
So price ranged while the trend is bearish. In a bullish trend also, it's possible for price to range while the trend is bullish. Okay, so now let's look at what we have on USDJPY. Now, as a beginner trader, as a new trader, okay, I would advise you work with 3 time frames. Note it down. 3 time frames you have to work with as a beginner trader. The daily, 4-hour, and 1-hour time frame.
Daily,
4-hour, and 1-hour time frame.
Okay, sir.
Your analysis starts from the daily time frame.
Okay.
Now, like I said, the first thing you need to know is what the trend of the market. So if you're going to be a day trader, you want to define the trend of the market using the daily time frame. For example, okay, the market will close by 11 p.m. Okay, today's candle will close by 11 p.m. Now, it is after the close of today's candle that I would analyze the market to know the trend for tomorrow's market. Now, the market is closed today, okay? So that will be on Monday. So for me to know the trend for Monday's market, I need to wait for today's candle to close. It is how the candle closes for today that I'll be able to know the direction for Monday market.
Okay.
Do you get that?
Yes, sir.
So as a day trader, you want to know the trend on the daily time frame. If you are a swing trader is one who holds trade from 4 days to weeks or months. That's a swing trader. A day trader is one who executes and closes a trade within 24 hours.
Okay.
That's a day trader. Okay. A swing trader holds trade for like 3-4 days to weeks or sometimes months. Then we have position traders. Position traders, they hold trade for weeks, months, or sometimes yearly. Okay? Those are position traders. People like Warren Buffett, George Soros, they are position traders. Okay?
Okay, sir.
So I want to assume that day trader or day trading will suit your personality. Okay. Those I recommend day trading for are those who have 9 to 5. Even if you have 9 to 5, you should have access to your phone or a laptop. Okay. For you to be a day trader, you should have access to your phone, have access to MT4, access to internet 24/7. Okay. Very important for you to work with the daily time frame. If you know your job will not permit you to have access to your phone at least every 4 hours, you should be able to access your phone every 4 hours or every 1 hour. If your job will not permit you, then you should consider swing trading. Okay? You should consider swing trading or only trade on days you are off duty. Okay?
Okay, sir.
Only trade on days you are off duty. If your job will not permit you access to your phone or laptop. As a day trader, you must watch the charts every 4 hours or every 1 hour to know what is happening. Okay? So as a day trader, like I said, you hold trade within 24 hours. I want to open my trade Asian session and close it before the market closes for the day, which is by 11 p.m. So I want to open my trade between 11 p.m. and close it before 11 p.m. Hope you get that.
Yes, sir.
Okay, so that's a day trader. Now, if you look at USDJPY, let's look at yesterday candle, which was Thursday, right? What candlestick formation do we have yesterday? What candlestick formation is this?
Okay, now this candle formation.
Yes. What is this? What is it called?
This one is shooting star.
This is an hammer.
Okay.
Right?
Yes.
This is an hammer. And you know we have two types of hammer. We have bullish hammer and we have bearish hammer.
Okay.
And I told you what to do when you have a bearish hammer. Can you remind me?
When we have a bearish hammer,
Yes.
if the next candle is bullish, we assume that
So if the hammer is bearish, you wait for the next candle to close bullish before you buy.
Yes, sir.
Okay. An hammer forms in a downward trend, indicates change in trend from bearish to bullish. Let me repeat that. When an hammer forms in a downward trend, it indicates that the sellers are becoming weaker. They are getting exhausted. Okay?
Okay, sir.
And buyers are beginning to show up in the market. We could also say that the formation of of an hammer in the downward trend indicates that the supply for that product or that pair is dropping and its demand is beginning to increase.
Okay.
Okay. So when supply is decreasing and demand is increasing, there's a high probability for price to go up. So when you see hammer in a downward trend, you should only look out for opportunity to buy. Okay. So yeah, we had an hammer, bearish hammer, and today candle is likely going to close as a bearish candle, right? It's likely going to close as a bearish candle. So we cannot execute buy trade on Monday, true or false?
True.
Because the rule is that for us to buy, we have to wait for the next candle to candle closes bearish. We cannot buy on Monday. So we might have to wait for Monday candle to close bullish before we buy. Right?
Yes, sir.
So for us to buy USD JPY, we would wait for Monday candle, and Monday is on first.
Yes.
So the market will be closed on Monday. I think, yeah, the market is likely going to be closed on Monday. So it's on Tuesday. So we have to wait for Tuesday candle to close bullish.
Bullish.
Okay, because these candles, you can see the bodies are bearish candle. This tells us that we still have sellers in the market. Okay, this tells us that we still have sellers in the market. And since we are considering buying, we want to be sure that there are buyers in the market. Okay. We want to be sure there are buyers in the market. And how do we confirm that? The close of the candlestick, the next candlestick. If it is bullish, that tells us that there are buyers in the market. That is when we can take the risk.
Okay.
But if what we are seeing on the chart is bearish candles, it would be wrong for us to buy. Okay. It will be wrong for us to buy. So we want to be sure that there are buyers in the market before we buy. So the first thing in defining the trend of the market is what? The candlestick formation. Note that down. The candlestick formation is the first thing you should look out for. If you want to buy, there has to be a bullish reversal pattern. Bullish reversal pattern. And the three that I recommend is hammer, inverted hammer, and engulfing pattern. Bullish engulfing pattern. Those are the three bullish reversal pattern that I recommend.
Okay.
Note that down. As a beginner, just focus on these three first. Hammer, bullish engulfing, and
inverted
hammer. Okay. Doji and spinning bottom, they are also bullish reversal pattern, but they are not strong reversal patterns. Okay, they are weak reversal patterns. Okay, but the strong ones are the three I just mentioned: hammer, engulfing pattern, and inverted hammer. Okay, so first thing is to look at the candlestick formation. Now, when after the close of that candlestick formation, for example, we have this hammer, pick up your horizontal line. Okay, pick up your horizontal line, identify the low of that candlestick formation. Okay, identify the low of that candlestick formation. Now, after identifying the low of that candlestick formation, like I said, we want to know if that level was a support in the past. Okay, so we want to go back to confirm if that level was a support in the past, and we want to see how traders reacted to that level in the past, or to that price in the past. If price went up from that level in the past, there is a high probability that what played out in the past will repeat itself. So first thing is to identify the candlestick pattern, apply your horizontal line on the low if you're considering buying, on the high if you are considering selling. Now, after identifying the low or the high, go back to confirm that that level was a support in the past. You can't just execute a trade without going back to see what has played out. Okay? You need to be sure that that level was a support in the past, and in the past, there was a reaction at that level. Okay? So you don't want to execute trade ignorantly. You need to be informed, okay? So we've identified this low. So let's go back on the daily. We're on the daily time frame. Let's go back to see that level. So if you go back, so we had, this is a support. Okay, we had a support here. We also had a support here. Let me change the colors here. Okay, so we had a support here. Let me use red for this. You know, I identify these levels as support. Are you still here?
Yes, sir.
Do you know why I identify these levels as support?
Yes, sir.
Why?
Because it closes above the price.
Above which price? The reason I identify these levels as support is that price started shooting up from those levels. That is why I identify these levels as support. Price started shooting up from that level. Can you see that?
Okay.
So any level where price starts shooting up or price starts going up is a support level. So to easily identify a support level, when a bullish candle closes after a bearish candle, a support level is formed.
I didn't get you.
When a bullish candle closes after a bearish candle, a support is formed.
Okay.
So you can see before the formation of this bullish candle, we had a bearish candle. So after the close of this bullish candle, this level became a support level.
Okay.
Then here you will see that price started going up from this level. And before the formation of this bullish candle, what candle do we have? Bearish, right? This is a bearish candle. So because this candle closed after this bearish candle, this level became what? A support. Is that clear?
Yes, sir.
So the reason we're going back is to check if this level was a support in the past. Let me switch to weekly. Let's see what we have on the weekly. So you can see what we have here. Can you see what we have here?
Yes, sir.
This is a resistance. This is a resistance, right? Why is it a resistance? Why do I identify this level as resistance? Can you tell me?
I'm coming. Resistance.
Yeah. This is a resistance. This is a resistance. Why did I identify this level as resistance?
The next candle.
What happened to the next candle?
Is bearish.
Okay. The next candle is bearish. here also the next candle is bearish. So before the formation of this bearish candle, we had a bullish candle. Also here, before the formation of this bearish candle, we had a bullish candle. So the level where price starts dropping is your resistance level. Did you get that?
Okay.
So to identify a resistance level, a bearish candle should close after a bullish candle.
A bearish candle should close after a bullish candle.
A bullish candle. When a bearish candle closes after a bullish candle, a resistance level is formed.
Okay.
Okay. And when price hits a resistance level, it is expected to drop.
Okay.
When price hits a resistance level, it is expected to drop. There is a 70%, or let me say 60% probability that price will drop each time it hits a resistance level. And each time it hits a support level, there is a 60% probability that price will go up or pull back from that level. So two major things that takes place at a resistance level is a pullback or retracement. Okay, pullback can also be referred to as retracement or a breakout. Those are the two major things that plays out at resistance and support level. A pullback, a retracement, or reversal. Those three names is the same. Reversal, retracement, pullback. Okay? Or breakout from the resistance or support. Okay? So we should be able to identify resistance level on different time frames. We're on the weekly time frame now, right? Now we started with the daily. So we identified a support, that is the low of the hammer on daily, right? So we want to be sure that that level has acted as a support in the past for us to be able to take trade, okay? For us to be able to buy. Remember, we're also waiting for the next candle to close bullish, okay? But we want to be sure if that support is a strong support level. If it's a strong support level, it means that it's likely going to repeat. It's likely going to hold. And how do you know it's a strong support level? If you go to higher time frame, daily, weekly, if that level has acted as a support in the past, there's a probability that it will hold. So there's a probability that price will pull back from that level. Hope you get what I'm communicating. You're getting the message, right?
Yeah.
Okay. So if you look at the weekly, this is what? Resistance. And also we had a resistance here, right? Can you see that?
Yes, sir.
This is a resistance. But now I would call this level a support.
What's the reason?
Oh, good. The reason is that this resistance has been broken. Immediately this candlestick closed above this resistance level, the resistance becomes a support. Do you get that? When a resistance level is broken, that resistance level becomes a support. And when a support level is broken, that support level becomes a resistance.
Okay.
It's just like the room you are in now. You have your resistance, you have your support. If you bounce a ball in that room, once it hits the ceiling, it will pull back, right?
Yes, sir.
Pull back to the floor.
Yeah.
When it hits the floor, what happens? Where is it going to again?
To go up.
It will go up, right?
Yes,
but it will get to a point that it won't hit the ceiling, right?
Yeah. Yes, sir.
Unless you exert pressure on it again, you bounce it hard again, that's when it will hit. But as time goes on, it won't hit the ceiling, right?
Yes, sir.
Okay. Now let's say you are in the, let me say, the second floor. The ceiling, which is your resistance, to those living above you, that your ceiling is their own, what's it called? Support,
But,
right?
yes, sir.
Why those who are below, your own support is their own resistance. Okay? So you understand the concept of resistance becoming a support and a support becoming a resistance. Hope you get that.
Yes, sir.
So if, for example, you are using armor on your ceiling, right? If you are hitting that ceiling hard, it's possible you break through, right?
It will pull back. Yes, sir.
No, if you're using armor on the ceiling, you are hitting it hard. What will happen? What will happen?
It will break.
It will break, right?
Yeah.
So when price gets to a resistance level and there is a high pressure or high demand at that level, there's a high probability that it will break out. Price will break out from that resistance. So price is approaching a resistance level and there are more demand. People are placing order, buy. That means the demand is high. What happens? The supply level or the resistance level will be broken. Same thing with support. When price is dropping and supply keeps increasing and the demand is dropping at that support level. When supply is increasing at the support level and the demand is dropping, what will happen? That support will be broken. It will now become a resistance. So a demand level becomes a supply level becomes a demand level.
Okay. Okay, wait. When the demand is greater than the supply,
yes,
it is called support level.
Support, yeah. At support level, demand increases, supply reduces or decreases.
Okay.
Okay. Then at a resistance level, supply increases, demand decreases.
Okay.
I hope you get that.
Yes, sir.
So you could see that this level now has become a resistance after this candlestick broke out. So we could say that price tested this resistance or support. Remember, it has become a support. So price is sitting on this support. And what do we have on daily? We have AMA. Right? We have AMA at this support level. So this is telling us that there's a high probability that price will go up from this level. But we can't just jump in, right? Because there's no bullish candle after this AMA. So if Tuesday candle closes bullish, there is a high probability that USD let's say 60% probability that USD would be bullish.
Okay.
Do you get it? Now, if this support holds, anything that makes price breaks this low of this candle, there is a high probability for price to drop to this next support. Okay?
I didn't get this one. Please come again. Your last statement.
Now we're looking for buy opportunity, right? So we're waiting for, that will be Tuesday candle to close bullish, right? Before we buy. Now, if we are buying, there is also a possibility for price to go in the opposite direction. Remember I said there are two major ways to define the trend of the market. technical and fundamental. So what we're currently looking at now is the technical aspects, right?
Yes, sir.
So if Tuesday candle closes bullish and we decide to buy, let's assume immediately we execute buy using our technical setup, a major news was released for US dollar or Japanese yen. If a major news is released, or let's say the president of one of the countries gave a speech,
Okay.
it will have an impact on USDJPY, right?
So
It will have an impact. If the news favors US dollar, what will happen? USDJPY will be bullish. If the news does not favor US dollar, USDJPY will be bearish, right?
yes, sir.
If the news was for JPY, if the news favors JPY, USDJPY will be bearish. If the news does not favor JPY, USDJPY will be what? Bullish. Okay. So if we're just using the technical aspect to define the trend of the market, and immediately that candle closes, we decide to buy, and the major news was released, what will happen? There's a probability that the trade could go against us. We could lose on that trade.
Okay.
Right?
Yes,
so
sir.
if we know that there's a possibility of we losing or the possibility of the market going in the opposite direction, we want to set our stop loss at a level where our bullish bias becomes invalid. So before you execute any trade, you should know your invalidation price. There has to be an invalidation price, meaning if price goes in the opposite direction at this point, I want to exit my buy trade. You have to know that before you execute the trade. That is the risk on the trade. Do you get that? Are you still here?
Yes, sir. I'm here with you.
Hope you're not sleeping.
No, I'm not sleeping.
Okay. Okay. So you should have what? Invalidation price. Note it down. Your stop loss price is your invalidation price. I want to buy. The market decides to sell. What do? I take that loss. Okay? I set my stop loss, instructing my broker that when the market gets to this price, I want you to close this trade. I have determined how much, I have defined how much I want to lose on this trade. It could be $30, it could be $50. So when the trade goes against me and I'm having a floating loss of $50, close the trade. If your bias is buy, you've executed buy and the market is selling, you don't want to hold on to that trade because you don't know when price would move in your direction or change direction. So you want to exit that trade, wait for another good setup to buy before you execute another trade. Do you get that? So if the reason we are considering buying USDJPY is this hammer, then our invalidation price will be the low of this hammer.
Okay.
So anything that makes a candle closes below the low of this hammer, there's a high probability that price will keep going down.
Wow.
There's a high probability that price will keep going down. I can decide to join the bearish move or exit the trade, then wait for a good setup to buy.
Okay.
Okay?
Yeah.
Are you with me?
Yes, sir.
Now, before, for example, if I decide to join the sell, for example, if a candle closes below the low of this candle, the question is, should I sell or wait for a good setup to buy? Personally, I would wait for a good setup to buy instead of selling. Reason being that if you look at this chart, look at where price started dropping. For some time, it has been bearish.
Wow.
Right? It has been bearish for some time, for close to like, it should be more than 4 weeks, right? From this point, this is 14th of November, 14th of November to 29th of December. This is over a month,
Yes,
right?
sir.
So
Yes, sir.
for over 4 weeks, USDJPY has been bearish. Now you would see that though the trend on the daily time frame is bearish, you would see that we still had some bullish moves, or we still have some retracements, right?
Yes, sir.
You can see at this point, someone who is trading lower time frame would have caught this move to buy. He would have made profit. Someone also could have made some profit here buying. Someone could have made some profit here buying. Someone could have made some profit here buying. Someone could have made profit here buying. But the long-term trend was bearish.
Okay.
So for position trader, they might have executed sell at this level, made profit here, a little pullback, okay? But they're still holding on to the trade. Since it's a position trading, they're expecting the trade to run for months before they exit. So at this point, they will not close their trade, but they will experience some drawdown here or pullback, right? Because from this point to this point, they would have made profit. Let's say they've made, let's say $200 from this point to this point. From this point to this point, price pulled back. Probably the $200 profits they've made at this point will drop to, let's say, 100. Do you get it? Then from that 100 again, price starts going in their direction. They start making profit, go to this level. Let's say they made 250. Price pulled back. Probably their profit will drop to, let's say, 200. From that point again, price start going down. They made some good profit. Let's say 300. Price goes back up. It drops to 250. Hope you're getting me.
Yes,
so
sir.
that the trend is bearish long term does not mean on lower time frames we won't find opportunities to buy. Okay, I always advise that you follow the long-term trend. Okay, follow the long-term trend, and to know the long-term trend, you work with the weekly, daily, and monthly time frame to know the long-term trend. But if you're a day trader, you might not really look at the monthly. Okay, you might not really look at the monthly. Monthly should be for swing and position traders. But if you're a day trader, you can sometimes work with the weekly time frame, okay? But your focus should be on the daily time frame to know the trend for the day. You get what I'm saying? So
Yes.
we had opportunity to buy here, okay? So if the trade drops, our stop loss should be at this level. Hope you get that. Stop loss will be at this level. So you can decide to join. So like I was saying, I wouldn't want to sell at this price. Reason being that I should have joined the trend earlier, right? If I had joined the trend earlier, my risk on the trade will be very low. Okay, so price has already gone far, right? If I didn't join at this point, if I didn't sell at this point, I should have joined after this pullback, right?
Yes, sir.
If I didn't join at this point, I should have maybe joined after this pullback. Maybe I would have made some good profit on this move. Or probably join after this pullback to sell. But me, entering at this point for me is at a higher risk. That is why I would not consider selling if there is a breakout from this low. I would rather wait for a good buy setup to execute a new trade. Do you get what I'm saying?
Yes, sir.
So you want to know where you ought to have entered a trade. Okay? You ought to know where you ought to have, for example, let's just assume the Tuesday candle. Let's just assume it closes bullish and it closes at this level. Let's just assume that it closes at this price and the candle closed bullish. So we should have entered buy, right? At this level. Are you with me?
Yes, sir.
What if I open the chart? At the time I open the chart, the market is already trading at this level, do you think it would be wise for me to start buying at this level?
It's not actually wide due
I
to
should have
the
entered at this level,
yes, sir.
right? I should have entered at this level. But maybe I wasn't available at the time the market or that candle closed, so I could not buy from this level. Maybe at the time I was available, the time I opened the chart, the market was already trading at this price. Do you think it would be wise for me to buy at this price?
It's still advisable to buy you.
It's still advisable to buy, but the risk would be too high.
Yeah.
Because if I had bought at this point, my stop loss would have been at this point, which is about 143 pips, right? This would be 143 pips. But if I decide to buy from this point, and I want to use the same level as my stop loss, let's see,
330 pips.
this is 468 pips.
Wow.
So when you open your chart and you see that price has gone far past the level you're supposed to have entered the trade, just let the trade go. Okay? You either let the trade go or you wait for price to pull back, come back to that your entry level. If it does not even get to your entry level, at least it should do a 50% retracement. At least from this point to this point, let's say this is a 50%, it should pull back to this level before you consider buying.
Okay.
Do you get what I'm saying?
Yes, sir.
You see this as a product. Okay? If you go to a store, let's say you want to buy a product, and you were told last week the product was sold for, let's say, 200, let me say 1,000 naira. It was sold last week or last 2 weeks for 1,000 naira.
Yeah.
And the day you visited the store, that product is sold for 5,000. Would you want to buy? Would you want to buy?
No, sir. I will wait.
You
But
wait. Or you go for, what's it called? Is it supplement?
another product, yeah, supplement or
That is cheaper. You go for something that is cheaper.
yes, sir.
Is it supplement? Is that the word?
It's not the word supplement, but you will go for another.
I'm trying to remember. It's supplement. Now it should be supplement. Supplement demand. I think. Okay.
Okay.
Something you can use to. It's not complement. It should be supplement. Just so that. Let me confirm. Okay, you go for something cheaper.
Yeah.
Which will still serve the same purpose. Okay, it's just like you have picnic and you have which other picnic, which other milk do you have? You have picnic, you have 3 Crown. Okay, so if picnic is sold for 500 and 3 Crown is sold for 300, they serve the same purpose, right? If you can't afford the picnic, you buy 3 Crown.
Yes, sir.
Okay.
Yeah.
Okay. Okay, not supplementary. Okay. So you get what the message I'm trying to pass across, right? So you don't want to buy that product at that price unless you are ignorant of the increase in price. But if you are aware, you sure wouldn't buy that product. Okay. So same thing with currency pairs when trading currencies. Okay. You want to know the best price, you should have entered that trade. And if the market is trading far past that level, patience, wait for price to pull back. It might not get to that level, Okay, but at least it should retrace at least 50%. So for example, from 1,000 to 5,000. Okay, if I
Yeah.
decide to buy at 5,000 and price drops to 1,000, I would lose 4,000. Right?
Wow. Yes,
Right?
sir.
I would
Yeah.
lose 4,000. But if I buy at 5,000 and no, if I buy at, let's say 50% retracement is, let's say 2.5, right? If I buy at 2.5 and price drops to 1,000, I would lose 1,005, which is still okay,
Yeah.
right? That's why
Yes, sir.
I said you should wait for price to pull back a little before you consider buying. If you don't have the patience to wait for price to pull back to that level, you ought to have entered the trade, wait for price to pull back at least 50% before you consider buying.
Buying.
I hope you're following.
Yes, sir.
So what are the first things you look out for when you want to define the trend of the market? What is the first thing?
The trend.
The trend. To define the trend, what is the first thing you want to look out for on the chart?
Like,
What is the first thing you want to look out for on the chart in knowing the trend of the market?
okay, the last candle.
Candlestick
That.
formation. Candlestick
Yeah.
formation, first thing. It has to be
Yes.
bullish reversal if I want to buy. If I want to sell, it has to be bearish reversal. That's the
Yes.
first thing you want to look out for. Then after that, identify the low of the candle or the high of the candle. Go back to confirm that level was a support or resistance in the past. Hope you get that.
Yes, sir.
Candlestick formation, identify the high or the low. Low if you want to buy, and high to identify resistance. That is for sell. Okay, so identify high or low, then go back. If that level was a support or resistance in the past, we can take the risk on that trade to buy or to sell. I hope that is clear.
Yes, sir.
Okay, so that's simple strategy. That is a simple strategy. Okay, so with that, you should be able to make some good profits in the market. Okay, resistance and support. So take your time, go to the chart, and do what we call back testing. Forex trading is not child's play. It's not for lazy people.
Yeah.
Forex trading is one of the most hardest or the most difficult business. Did you get that?
Yes, sir.
It's the most difficult and it's the most rewarding. So if you want to get that high reward, you must be willing to take the risk. Risks, you have to make sacrifices. And the sacrifice is time, money. Okay? Because you have to spend money on data, your time is money. So you have to make those sacrifices. Forget attending my class. If you attend my class and you don't dedicate time, enough time to study the chart, you won't be successful. You won't be successful. I've been in this game for over 10 years and I still spend not less than 5 hours daily, not less than 5 hours daily studying the charts.
Wow.
Okay? I still spend hours because I believe my strategy can still be worked on. If my winning rate is 60% or 65%, I believe I can improve the strategy to generate, let's say, 70 to 75%. Okay? It's not possible to attain 100%. It's not possible. There's no strategy out there that will give you winning rates of 100%. Okay? So if your strategy can give you 70, 75%, most strategy have there is 50% winning rate. So if your strategy can generate 60% or 70% winning rate, that's a very good strategy. Even with a 50% winning rate strategy, you can be profitable long run using proper risk reward. If you're trading with 1 to 2 risk reward and your strategy has a 50% winning rate, you will still be profitable. But if your strategy has a winning rate of 70% or 75%, your profits, you make more profits than someone that is trading with a strategy of 50% winning rate. So I'm always working on my system. Okay, I'm always working on my system. And if you are new to trading, you should spend more more time on the chart. I don't know, maybe because when I started, I had no mentor. Okay, so I was spending not less than 10 hours daily on the charts. Okay, so these days you have mentors. You know, your mentor is to make things easy for you, but at the same time, you still have to put in some time. Okay, you still have work to do. Okay. The reason you have a mentor today is that when you do some studies, there are some things you won't understand. You have someone you can ask questions. Okay. Then there was no one to ask questions. I had nobody to. There's some things I will read that I don't understand, you know, instantly. There was nobody to meet to ask questions. Okay, so you have to make those mistakes. Make mistakes, you learn from the mistakes. That's why it took me years, you know, to get to where I am today, to become consistently profitable. It took me years because there was no mentor. So I expect that do your study, the things you don't understand, note them down. Note them down. I will come for classes, ask questions. The ones I know would provide answers. Okay. I don't claim to know everything. Okay. I don't claim to know everything. But the ones that I know, like I said, I've been in this game for over 10 years and I've tried several systems. I've read a lot of books, so I have more experience than someone who's just starting. Okay, so most of your questions, I would definitely have answers, and if I don't have answers, I have people I can refer you to. Probably a YouTube channel that you can go study more about that topic. Okay.
Okay, sir.
So let's look at one or two more examples before we end this session. So I should resume maybe the 9th, second week of the month. Second week of the month. I think that's when I will resume fully. Back to trading. Yeah. So I expect that you should also start trading. Okay. I'll still be guiding you. We'll be having daily market analysis session. Okay. Every evening, maybe 3 times in a week. Tuesday, Wednesday, and Thursday. Those days are the most volatile days. So we have daily market analysis session. I will tell you what you expect for the new day. Okay, I will tell you the direction. Okay, for the market. So it's your responsibility to execute. I will tell you area you should look for entries for buy or sell. So when market hits that level or that price, you are expected to execute the trade. You don't expect me to tell you it's time to execute. You just know the price to enter buy or sell. Though I'm planning to start live streaming next year. Live streaming all my trades, every trade I'll be executing for those for my students. I'm still considering it might be free, and I might ask them to pay for that live streaming. Okay, I might not make it accessible to everyone. Okay, so at least I'll be giving like 3 calls in a week: Tuesday, Thursday, and Tuesday, Wednesday, Thursday. Every trade I execute in the market, I will tell you the reason why I'm executing the trade, my stop losses, my take profits. Sometimes I don't want to do those things because it makes people lazy. It makes people lazy, but I'll try that next year. Let's see how it goes. Let's see if it will work out. It should. Yeah. But one thing about live streaming is that you don't know when your setup will show up. You get it. So when you ask people to join your live stream and you're just there for an hour and there's no opportunity to buy or sell, you're just going to waste their time. And also you're wasting your own time, you're wasting data, spending money, which I think does not make sense. But if I were to be a scalper that is using 1 minute, 5 minutes, 15 minutes for analysis, then live streaming will make sense. But since I'm a day trader, I just look for one good trade setup in a day. And when that setup will show up, I don't know. Do you get it?
Okay.
So that's why I don't do live stream. But let's see let's see how it will go. Okay. But like I said, we'll be having the daily market analysis session. So you have access to that. And when I execute trades, I will add you to a WhatsApp group, a Telegram group. Every trade I execute will tell you why I execute the trade. And sometimes I'll post on how I'm managing the trade. Okay. Adjusting my stop loss as the market keeps going in my direction. All that I will share in the group. It's going to be a private group. It won't be expensive, very, very cheap. All through this year, I was just dishing out information for free. I did a lot this year. I know they say anything that is offered for free is not appreciated. It's not valued, right? So you'll just be required to pay a token. Maybe that will just take care of the internet connection. A token. I just want people to be serious. That's just it. The money is not the thing. Asking people to pay me for training is something I can do for free. I've done it. I've taught people for free. But sometimes you just ask them to pay so that they will get serious. One of the reasons I'm still in trading today is because I paid to learn how to trade. I attended a seminar in 2009 and I paid, I think, 15,000 Naira. That was close to $100. And my salary then was less than $100. I was earning less than, let's say, 13,000 or so. But I paid 15,000 to attend the seminar. Okay, I paid 15,000. That's my sweat. And I made up my mind that this 15,000 will not just go like that. It's either this business works, I will make it work. It's either I perish. Huh? Yeah, so that's the mindset you need to have to succeed in any endeavor. You have to make up your mind. It's either this thing works or I perish in this thing. Look at people who have succeeded in any endeavor. That's the mindset they operate with. This thing, I must make it work. I must make it work. They focus on that thing until they achieve success. It is after they have achieved success on that thing, they will now diversify. They've made that thing is not bringing any money. Then they will now diversify into other things. So if you want to be successful at any endeavor, at anything, you have to focus on that thing. Okay. One of the reasons people don't succeed in trading is that They want to do this online business. They want to do this online business. They want to do this online business. They are not focused on one thing. They want to do affiliate marketing. They want to do network marketing. They want to do crypto. They want to do, they want to trade indices. They want to trade bond. They want to trade stocks. You have to focus on one thing. From 2009 to date, the only thing I trade is currencies. Okay, the only thing I trade is currencies. It's recently I started trading gold, which is commodity. It's recently. My focus was on currency. And with the knowledge, with the skill I have on trading currencies, I can apply it on any other financial market. In as much as this MT4 analysis being done, I can have access to the chart of that instrument. I will still make money in that market. All I just need to learn is just the basics, some of the terminologies I use in that market. Once I'm able to understand those basic terminologies, I would apply the same strategy I'm applying in the forex market on those markets. So focus on one thing until you become successful at that thing. Start making money, then you can diversify. Dangote is known for cement, right? But he has other businesses. I think he started with cement before he diversified into other businesses, right?
Yes, sir.
So study most of these wealthy guys. They know them for one thing. Melu is known as the, what was it called? Is it the owner of Zenith, right?
Yeah. Yes, sir.
Or there are other businesses he does that you don't know.
Yeah,
So
sure.
people should know you for one thing. People should know you for one thing. Most people contact me today because they've been following me for years. Most of them will tell me they've been following me for 3 years, 4 years, and they see that I've been consistent. You see, they see that I've been consistent.
Congratulations.
After 3 years, after 3, 4 years, that's when they'll send me a message they want to learn. So people are watching you. If someone wants to invest money in you, they want to be sure you are consistent in that thing you are doing before they will invest money in you. If you are the type that switch from one business to another, they will see you as someone that is not serious. And you can't invest your money in someone who is not serious. Or when they see that you are consistent, they will be willing to invest in you.
Yeah.
Okay.
Okay, sir.
So let's look at one more. Okay. So I expect that you should start trading next year. Okay.
Okay.
Start trading next year. So this is GBP USD. So what do we have here on GBP USD? So this is the weekly candle. Okay. Let's go to daily. What do we have on daily? Do we have a bearish reversal pattern on daily?
Bullish.
Do we have a bearish reversal pattern on daily?
No, sir. It's bullish. Bullish.
Why do you say it's bullish? Which of the candlestick? Which of the candlestick?
Like, because the last candle closes bullish, the candle formation.
What's the name of this candlestick formation?
Doji.
You're referring to this candle, right?
Yes, sir.
Okay, so what is the formation? What's the name?
It's like Doji candle, sir.
Okay, Doji does not have a body. This is a spinning bottom. Okay,
spinning bottom.
This is a spinning bottom. But if we go to weekly, if this candlestick closes, what candlestick formation would this be? What candlestick formation would this be?
Wait. Inverted hammer.
That would be shooting star. Okay, that would be shooting star, right?
Shooting star.
Now, before the formation of this shooting star, what candlestick formation is this? We had a spine in top, right? a spining
Yes,
top. Now, if we identify the high of this spining top, this previous spining top, if we go back, was that level a resistance in the past? Was it a resistance in the past? The high of this spining top, was it a resistance level in the past?
yes, sir.
Right?
Yeah.
We had a resistance here. We also had a resistance here.
Yes,
Right?
sir.
I
Yes, sir.
could see this weekly candle, if it closes as a shooting star, we identify the high, we go back to confirm if that level was a resistance in the past. So the high of this shooting star, was it a resistance in the past?
The resistance.
Okay, so being a resistance, what should we look out for next week? What should we look out for, buy or sell?
Buy.
Why would you want to buy when you have a shooting star? What does shooting star indicate? What does shooting star indicate? We have a spining top. What does spining top indicate?
Spining top indicate that, like, the spining top now, if you want to sell,
Yeah.
the, like,
Spining top indicates change the trend from bullish to bearish. So we had a spining top here, but because the body of this spining top is bullish, we wouldn't have executed sell, right? We would have waited for the next candle to close bearish before we consider selling, right? So after the bullish spining top, now this week, candle is likely going to close as, that's closed already, right?
yes, sir.
I think it has closed. So this is a shooting star. So if this closes as a bullish shooting star, we wait for the next candle to close bearish, right?
Okay.
Yeah, we wait for the next candle to close bearish. So if we are just focused on the weekly time frame, we wait for next week candle to close before we sell. But we wouldn't just be looking at price action next week. We wouldn't just be looking at the market next week without executing trade. So what do we do in this case? After the close of this week candle, we go to daily. If I go to daily and I have a bearish reversal pattern on daily, I don't have to wait for next week. So you can see what we have here. This is a bearish reversal pattern, though not a valid bearish reversal pattern. Okay, because this bearish candle is neither a spining top, it's neither a bearish engulfing pattern, it's neither what's it called, doji or shooting star or hanging man. So it's not a valid, but this candlestick closed bearish. This tells me that the bears, sellers are showing up in the market. Okay, now we had a support here, right? If this candle closes bullish, this level becomes a support, true or false? If this candle closes bullish, this level becomes a support, true or false?
Yeah. True.
True, right? Because this bullish candle closed after a bearish candle. So this level became a support. If we go back here, it was a support too, right? Resistance turns support, right?
Yes, sir.
This level was the resistance. This candle broke out from that level. It became a support, right? So I'm considering selling based on this weekly candle formation. Okay, I'm considering selling based on this weekly candlestick formation, which is a shooting star. So if I go to daily, we have, like I said, this is not a valid bearish reversal pattern. So let's go to 4 hour. Let's see what we have on 4 hour. You can see on 4 hour. Do we have a bearish reversal pattern on 4 hour? Yes. Can you see this?
Yes, sir.
So we had a bearish spining top, then we have a shooting star. When you combine this with this is an engulfing pattern. This is an engulfing pattern. A bearish shooting star closed afterwards a spining top, bearish spining top. This confirms sell. One would have entered sell at this point, right? If we're just focused on 4 hour, we would have sold at this level. But we are working with the weekly and the daily time frame. We don't just want to just execute trade using the 4-hour time frame. Remember, we are working with the weekly trend or the daily trend. Okay, so we would have entered sell here. Okay, but now the market is trading at this level. So next week, I'm considering selling if this support is broken or price pulls back to this level, which is supposed to be our entry level. So you see that price goes back up to this level or price breaks this support level that we identified on daily, this support level. That is when I'll consider selling GBP USD. So on GBP USD, my bias for next week is sell. My bias for next week on Euro on GBP USD is sell. I would only look for sell opportunity on GBP USD. Now, that my bias is sell does not mean those trading on 15 minutes and 1 minute time frame won't see opportunities to buy. Okay, they would see opportunity to buy on those time frame. But I'm working with the weekly and the daily time frame. Hope you get that.
Yeah.
So, for example, if you go to 4 hour, though the trend is bearish, people bought at this point will make profit. Those who bought at this point also would make profits because the market went in their direction. So they would have made some good profits also, despite that the dominant trend is bearish. You get.
Yeah.
So that's it for tonight's session. So I would this replay will be available maybe tomorrow. I'll try to upload it and send you the link. Okay.
All right.
So you watch it again then. Before we treat the next topic, I'll take your questions before we treat the next topic. So this is the strategy I want you to start with: resistance, support, and candlestick pattern. This is what you should work with for now. Okay?
Okay.
So if I see that you've mastered or you've understood this strategy, then I can teach you more strategies. Okay?
Okay, sir.
So that will be all. Okay?
All right.
Your question will be taken in the next next class.
Okay, sir.
You're welcome. Have a wonderful night.
I really appreciate it.
Happy New Year in advance.
Same to you, boss. I really appreciate it. Best wishes.
You're welcome. You're welcome. I'll be more, happy or more excited when you apply these things, when you start putting these things to work, and when you dedicate your time to studying, studying the charts. Okay?
Okay, sir.
Your success is what will, make me feel, should I say, fulfilled, or make me feel excited or more happy. Okay?
Okay, sir.
When you are successful, that's when I'll be very happy. Okay? So please do the work that is required.
Okay, sir.
After this class, open the charts. There's 1 hour, 2 hours a day. Go and identify these candlestick patterns, because I can tell you still have some difficulty identifying these patterns. Go on the chart and start identifying them, so that anytime you open the chart, you recognize those patterns and you'll be able to act immediately. Okay? You will not be guessing, is this hammer? Is this inverted hammer? You just know when you see it and you do the right thing. There's a time to analyze, there's a time to execute. Okay? Most times when it's time to execute, that is when some people will be analyzing. No. When it's time to execute, you execute. When it's time to analyze, you analyze. Okay? And the time to analyze, you do your analysis before market opens or before the market becomes very volatile. For example, if you are trading the London session, if you want to trade the London session, you should analyze the market before the open of London session. If you want to trade Asian session, you should analyze the market before the open of the Asian session. If you want to trade New York, you analyze the market before the open of New York session. Once the market opens, the next thing is execution, execution, execution. Okay? So don't mix them up.
Okay, sir.
All right. Good night.
Thank you, sir. I really appreciate it.
You're welcome.